Ladies and gentlemen, welcome to the Midday Market Monitor. As you can see, Upwork down 17.7%. Guess people didn't like the earnings yesterday after the close. However, the IGV, BlackRock's tech and software names, once again up another 1.3% on the day. So we'll see if that can maintain and continue to climb throughout the day. Okay. That being said, I did want to talk on a few different names, Google being one of them, even though we ended up seeing a little bit of a sharp decline here, down 1.8%. It does look like they will actually be able to secure their acquisition of Wiz. I was going to say Wise. They're not acquiring Wise. They're acquiring Wiz, which is a cybersecurity name specifically for clouds, and it's across all the major clouds. So it's not actually just going to be just for Google. If we remember back whenever they made this acquisition, a $32 billion acquisition of, potentially one of the fastest, if not like the actual fastest growing cybersecurity names, specifically in the cloud as well, that they are across Azure, Google Cloud, and AWS, and many others. And that's going to continue that way even after this $32 billion acquisition, that not even at the time of this acquisition announcement were they making $1 billion per year in revenue. Okay. So this is a growth name, and we'll see if over time that'll actually be a good investment or not. However, the potential main part about this sell-off is the fact that they have now completed its $20 billion, larger than expected, bond sale that people have been a little bit worried about, because now we're starting to get into the debt markets. This is across many of the largest Mag 7 names now that are starting to build up a little bit more debt. Obviously, we're still free cash flow positive on many of these names, but they're looking for new ways to fund their potential growth in the data center space. Now, for me, I still remain a big believer that potentially, if you are worried about, the decisions that these companies are making, if this is going to actually lead to higher margins, if they are going to potentially regret spending all of this money later on, obviously not this year, because they're still, talking about spending for multiple years at this sort of pace. Jensen Huang's been a big believer that we're going to end up seeing over $1 trillion of annualized spend in CapEx for GPUs. That if you are that type of believer, then Nvidia is one of the clearest winners. They are, extremely capital light. I think they're spending roughly about $1.5 billion, not $610 billion, nothing crazy, not $200 billion like Amazon, but $1.5 billion in capital expenditures. And, on top of that, they're bringing in potentially some of the highest amounts of actual free cash flow, because they have high margin products that are very hard to replicate, even though, many of these companies, Microsoft and Amazon, are toting that their products are better than Nvidia's. What they're actually comparing them to are older generations rather than what, Nvidia is actually coming out with. So by the time that many of these new products actually get released to the market at scale, they're going to be up against one-to-one with the next largest product of Nvidia. Then once again, they have no, or at least not much opportunity to sell those products to external customers. Would you consider PayPal here? No. It's not that I don't think that there's opportunity. I just honestly think that there's such a glaring opportunity in artificial intelligence. And every day that grows deeper and deeper. Today, probably the biggest piece of news was the TSMC monthly metrics on revenue growth. So I'll show you. This was posted pretty well online, where we could end up seeing their monthly metrics for October, November, and December, where growth had sort of stayed in this 20% range. October was a little bit lower. But overall, for 2025, growth was at around 31.6% year-over-year growth. Okay. These are in Taiwanese dollars, but the growth rates are still dependent, right? In January for 2026, which is what we just got, growth accelerated once again back to 36.8%, much higher than what we even saw in the full year of 2025. Okay. So I'm extremely excited about this growth. And I think that that is, largely because Nvidia just sees higher and higher demand. So they're going back to TSMC and saying, hey, we need higher production, squeeze out a little bit more. No days off. Okay. You're working from 9 to 9, 6 days a week. Please and thank you. So yeah, I'm just seeing a lot of growth there on the chip side, on the infrastructure side. Amcor ended up posting a nice report as well, and you can buy a bunch of these other potential proxies, whether that's for packaging or testing or for energy or whatnot. But they're all leading back to the exact same customer and the exact same supply chain, which is more AI use cases leading to more chip sales, more data centers being set up. And I honestly think that we're just getting started. We just saw a report from, Meta that says that they're going to start bringing in more Meta AI products directly into Facebook, which is serving, billions of users. And then we were talking about on the Pro live stream, which was the 12-to-1 live stream. We were talking about Amazon now being at $210 a share. There's not an analyst on planet Earth that thinks that it should be valued anywhere near this. And in fact, I think the average price is over $300+ a share, 50% upside for a $2+ trillion business. You don't see that every day, but it's because it's being discounted, even though that growth on AWS can accelerate past 30+%. We've seen multiple firms come out with that same target. That the capital expenditures are actually building hard assets that are extremely hard to replace. A new model might be able to replace ChatGPT or Anthropic or what have you, but it's very hard to replace warehouses and data centers that are owned and operated by Amazon, let alone the full self-driving cars that will end up, helping with the last mile delivery, or the fleet of airplanes that they end up accumulating, or the agentic, agentic AI services that are going to allow them to, facilitate more of their actual code for more future verticals that they're going to enter, like Amazon Pharmacy, for example, or even just the generative AI stuff for their, advertising. It's funny that the two biggest areas that they're really growing into for Amazon is AWS and advertising, which is some of the highest margin businesses as well. I just find it, very funny that, like, Amazon is just being, I don't know, so unbelievably, how do you say it? Like, disrespected. We're down 16.5% over the last 3 months when there's not been a single story over the last 3 months that has essentially said that this is a bad investment. And the only thing that people are pointing to is the CapEx. You're paying for future growth. If you want to be a value investor, stay away from Amazon. They're the largest growth company in the world, right? They're the biggest startup. I don't know. Okay. Tanner, where do I find the Pro live streams? They're at futureinvesting.pro. Yeah. But completely separate from the like YouTube membership thing or whatever. The live streams are exclusively for futureinvesting.pro users or members. Hey Tanner, have you seen the Nebius acquisition? Absolutely. That's why the title was acquisitions, because we saw the Nebius acquisition, and then we saw the Google news as well, and also Mr. Beast buying Step. There's been a lot of changes. Also, before we jump into the Nebius acquisition, which obviously I think is just highlighting even more how important that this, that they're not just offering data centers just purely for tokens, but they're offering honestly a full scope AI service. Like Nebius Cloud, I think should be looked at as Google, Google Cloud or Azure or something like this. It's not just for additional compute, right? I think maybe there are some services that are doing that, but that's really why I like Nebius, is that these guys are not just like old Bitcoin miners or something like this where they have no concept of artificial intelligence, but they know how to set up racks. It's like, no, that's not what this is. They are fully AI guys that are, trying to help with AI specific workloads for every use case, for robotics, for agentic purposes, for everything that we're going to end up seeing into the future. So Nebius right here back to $95 a share. It's crazy. And after hours on Thursday, you could get this stock for $68. Did you look into Step's terms of services? It's kind of scammy. Well, I think that things are going to change drastically under Mr. Beast. What I think he's just trying to get is a lot of the infrastructure. Okay. That being said, Shopify also got quite the large upgrade, and you can see this reflected in the stock price. We ended up falling once again on that nasty Thursday after earnings. 106.84 now end up returning back to 128. This is one of the biggest positions in my portfolio, and essentially what MoffettNathanson said was like they're going to be a massive AI winner. They have strong channel checks. They're growing in market share. No one's disrupting them. Everything is going exactly according to plan. Great. So we'll continue to hold. Yeah. Okay. On top of that, however, there were a couple videos that I wanted to run through. There was this, I was so excited to watch this Kalshi CEO. Tarek was on CNBC and was going to talk about the massive amount of volume on the Super Bowl growth in prediction markets and everything like this. I was so excited because Robinhood's earnings are tonight. And then all they did was like Becky Quick was just like hassling him on whether or not these markets are legal or not. It was so boring. They had an opportunity to make a good interview and Becky straight up ruined it. That being said, I did want to listen to Gene Munster from and sort of his take on where we are in the utility of artificial intelligence, because there's no utility, there's no need for Nvidia chips. So they kind of go hand in hand. Let's have a listen.
Joining us right now with more on AI and tech, Gene Munster. He's the Water Asset Management Managing Partner. Good morning to you. Weigh in on all of this, because we had a wild ride, obviously, with the hyperscalers last week. It seemed like things were going badly, then things seemed to turn around. We've had this sort of ongoing debate all morning about whether these companies, which historically were capital light companies, are now going to be capital heavy and capital heavy permanently.
So the headlines, and even with this bond or this debt raised by Google, kind of injects this new uncertainty to how these companies are operating, like you talked about, kind of increasing debt. That's the headlines. I think that misses the underlying story here, which is these are the most competent companies in the world when it comes to understanding AI. Some of them, Meta and Google, are seeing profound impacts in terms of their growth rate. Meta guided to revenue growth in March of 35%. Okay. They just did 22. But the story behind all this, the substance, is that these companies are feeling increasingly confident that AI's utility will ultimately deliver a return on investment. Of course, that's been a big open part of the conversation, is this profitless prosperity. But I think that's the underappreciated piece. We saw these big companies sell off on this big CapEx news. Certainly, from my perspective, it misses the point. I'll just get to the punchline here, Andrew. Is I think we're at the doorstep of what will be a breakthrough in terms of the utility of AI. When I talk about doorstep, I talk about 6 months, maybe 12 months away. typically people who guess about the timing of these will give 3-year, 5-year estimates of when things will break out because it's a comfortable time away. But I do think we're much closer, and in particular, what's going on with the CapEx, but also what we saw with Claude Code and this open claw initiative. It's just remarkable in terms of the utility. And so I think we are at a breakthrough point. I think the market is having a really difficult time of kind of making sense about what it ultimately means. But I just want to mark the moment that this is some pretty big news over the past 3 weeks.
So, Gene, I don't disagree with you in terms of just how quickly AI is ascending and changing our lives, and maybe there's going to be a new inflection point in terms of just what that productivity looks like. I think on the flip side, there is a question just about how much spending is taking place and whether this is one-off spending or whether we should start to think about this more as a very long-term spending plan. Meaning over the next decade, if you believe that people are building data centers in space, that quarter after quarter, year after year, you're not going to see these CapEx numbers go down.
The bottom line is I think we are in for 5-10 years of elevated CapEx, in part because of the utility is starting to present itself and there's motivation for these companies to build this. There's also an upgrade cycle that will come. Of course, these have 5-year lives on it, so we'll get to that. But I just want to kind of put some a little bit perspective in terms of, how can this happen? How can we continue to have elevated CapEx? Investors are wrestling with what CapEx is going to be next year, but I'm talking about elevated CapEx for the next decade. How can that be possible? And the answer is that this concept of training versus inference. Jensen's talked a little bit about it, but at the basic core is that AI is not training. AI is thinking, and thinking is synonymous with inference. We believe that inference can be tens or hundreds of thousands of times bigger than what we're seeing and spending in the infrastructure and the energy use around what's going on with training, which is still about half of what AI is being built for today, is that training piece. And so if you adapt the view that utility will come and this will eventually humans will understand that they need to embrace these tools, you can build a strong case that a company like Nvidia can grow in kind of a steady case at 15% for many years out.
So my question is, we got to run, but put Nvidia aside. Obviously, the hardware players, they're going to win because everyone needs to buy the hardware. My question is what you think what kind of margin compression takes place long term to the hyperscalers themselves?
So the hyperscalers, the biggest companies, I think the majority of them are going to be in a great place. Specifically Apple, Google, I see margin expansion with them. This personalized AI, this open claw, what we're seeing glimpses of, Apple, Google have big opportunities that should be positive for their margins. It's not universally positive, but I think the companies that have platforms will ultimately deliver higher margins.
Yeah, I agree with all that. 5-10%, 5 to 10 year build outs over time. Unreal. And you know what? I say unreal because it's like, wow, this is the world that we're living in, and it's changed so much from like 4 years ago. But it's actually very believable because we've seen the tools and they're very much real. Becky didn't ruin the interview. She asked very relevant questions about gambling, a coercive social activity that has destroyed families and lives. These companies are trying to normalize it. Yeah, I don't know if they're trying to normalize it. It's just gambling's legal and they're allowed to, like, she's essentially asking, like, imagine if there was a casino, CEO that was on Becky's thing, and the whole time she was asking questions of, hey, don't you know that you're ruining lives and stuff like this? Like, okay, why have me on? Like, was this a hit piece, or are you going to ask me questions about, like, if we're planning on growing, or, how did the Super Bowl end up doing for our business? Or, like, she absolutely ruined it. You could have asked, they asked him a bunch of regulator questions as if he's setting the rules. He's not. He's playing within the rules, which is how any capitalist should do for their business, right? why are you asking him about the moral qualms of his business? Clearly, he's fine operating in the moral realm of his business. He does it every day. Like, yeah, I don't know. So when are the right times to ask those questions? You don't ask them to him. He doesn't control the. Go talk to a regulator. Go talk to your local councilman. Like, it's not his. Go ask Google about why they're doing deals with the government or something like this. Why have any CEO on if you're just going to braid them about questions that they can't control? Ask them why they went down on Super Bowl. How are they planning on fixing it? How did their partners do, like Robinhood? What were some new markets that they're looking on entering? I mean, there were business questions to be asked, and they didn't ask a single one. And she didn't even want another reason why I said that she ruined it is not even that she asked the questions. She didn't care to hear the answer. They cut him off like 600 times. It was a brutal listen. It was the worst interview that I've seen Becky do, because I actually do like her, but they didn't care. She just wanted to hear herself talk. They didn't care about his answer. Yeah. If you look into every company, you'll find moral dilemmas. Of course. Of course. SoFi's mission is to get your money right, and then they also offer credit cards. Like, don't you know that many families and lives have been ruined on credit cards with their inability in order to pay off cards? Like, come on. Okay. There was another question though before that I actually really liked. Was there news on the TSM chip sales? Just the January monthly metrics that we ended up seeing were extremely strong, and growth even re-accelerated higher than 2025. So that's very exciting. TSM's not selling to directly to consumers. They're selling to the Nvidias and AMDs and these sort of things. So those companies are likely to end up putting up higher numbers than potentially what people are even expecting right now. Yeah. And honestly, I think that the main answer to what Becky or what Tarek should have actually said on that call was that just like anything, if there are highly, highly manipulative markets, that somebody can end up going and say, hey, you know what? They were talking about, like, there was a prediction on what the first song was that Bad Bunny was going to end up singing, and how it would be impossible to track whether there was inside selling or insider buying and trading of that market, because either Bad Bunny could tell his family or something like this on what song he was going to sing, and so they could, or he could change the list or something like this in order to facilitate the exact outcome of what he wanted, or potentially it wasn't even the actual artist, but it could be any of the dancers or anything like this. All of these people would have that information, because the choreographed dancers need to know what song is first, so they could tell their friends. It would be hard to track the third, fourth layers of who's trading on what information. If you know that those markets are highly manipulated, don't play in them. You know what's a highly manipulated, quote unquote, like game or market, another game of chance, is just going to a casino and pulling a slot. I mean, your chance of winning exists, but it's low, and we know that it's low, and so we don't consider that, a way to make money over time. So yeah, just if there's highly manipulative markets and prediction markets, treat them as gambling. Okay. The Bunny Bowl was fire, by the way. Michelle, I feel like that's a different language. No clue what you're trying to say. The Bunny Super Bowl, Bad Bunny Super Bowl thing. Yeah, I didn't actually see it, so I have no clue. the difference is that insider buying is cheating. Yeah, but the thing is that they don't really know if it is it's impossible to track. So they do go after insider buyers. They do. They're regulated the same way that the NASDAQ and the New York Stock Exchange is actually regulated. The only difference is like, okay, how do you track the third and fourth relationships of people where, somebody's telling their mom, that mom is telling their friend, that like, who knows? It would be so freaking hard. But they do have KYC on their customers, and they do know their buys and sells. Prediction markets are gambling, but there's also lots of insider info. Yeah, so then don't participate. It's not like a market that we have to participate in. Look at it as gambling and then realize that the odds are not in your favor. Gambling's still legal in the United States. Okay. Tanner, what's the price to shave the stash? Nothing. I'm not buyable. I'm definitely buyable. I don't know what it would be though. It'd be like 10 grand. I'm not. I like it a lot. Okay. Let's see. So Nebius. That's a good transition. So the press release from Nebius essentially said, and we'll pull up the stock here as well. Nebius. There we go. Nebius back to 94. What a whirlwind holding this stock is. But honestly, I do really like it. Would you sell 100 shares of AMD to buy 1,000 shares of SoFi? I enjoyed the interview with Noto, Tevis, and Tanner. Well, I don't know what the rest of your portfolio looks like. I think the idea of there's so many different things here. So one, first off, I don't hold AMD and I do hold SoFi, so I immediately have a bias towards SoFi. However, it's hard to be bearish on the infrastructure names for artificial intelligence after all the information that we just covered. Like, I mean, it's such an interesting area. So I'm very bullish on AMD as well. I just don't have shares in it because I believe more in Nvidia, and I know the company better, and I know the products better. But that doesn't mean that I don't see upside in AMD. And depending on, like, if this was your total portfolio, I'm not sure. But I don't think that you should be trimming a name that's on a pretty decent discount to buy another company that's on a pretty decent discount. Like, what's the form of the rotation? You believe that the CapEx spend is over? I don't think that that's true. Okay. Let's see. If we had, okay. Nebius is coming down after earnings. I mean, there's definitely a possibility of that for sure. There's so many things that they could end up saying that would turn the market sour on the company. So I believe that. By the way, I found out that the earnings call is at 8 p.m. 8 a.m. on Thursday morning. So we will be live for that. I'll be listening to Nebius with bated breath, and I'm not going to be buying before earnings or something like that to expect some massive climb. Of course they could. Like Q4 is always very exciting. You get guidance. Maybe if they end up holding or even fine tuning that $7 to $9 billion of ARR, maybe if they say, hey, it's actually going to be more towards the 8 to 9 billion, and they actually just sort of, move the guidance up a little bit, that could be really freaking exciting. Okay. But that being said, the market has penalized every single company that has talked about increasing capital expenditures. Nebius is going to do the exact same. So hard for me to, see the market getting super excited unless they announce another hyperscaler deal. There's so much. Okay. How is AI hyped when millions of people use it every day? Well, I think that people are more hyping up. Like, if I had to play devil's advocate, I think that the quote unquote hype is that the cost to essentially generate these tokens is going to fall to near zero. That I think many people think that it's being hyped up because a lot of what is being done for artificial intelligence might end up getting to an area where they could just do this locally. So you're actually not tapping into any data center. You're not tapping into anything. It's just being run locally on your iPhone chips that are already in your phone. We're a far ways away from that, and the use cases for artificial intelligence will be so much more broad than what they are today in terms of just, like, right now, I think everyone just thinks that AI is a chatbot, when really I think it's not just a coworker, but a fleet of coworkers. There's going to be so much, but yeah, I think that's sort of the complaint, or like the worry. Even with robotics, like, is robotics going to send back to a data center, or is it all going to be done locally eventually? How much data do you need? How much training do you need to snow plow a driveway, for example? You know what I mean? Okay, so let's see. Nebius acquired Tavily, which I think is a Hebrew term for give me, if I'm not mistaken. I think that's what they said. I don't have it here in my notes, but I read somebody say that it's a reference to the agentic part of the actual company. The acquisition advances Nebius' strategy to build a unified platform where vertical AI companies and enterprises can build, tune, and run autonomous agents. By adding Tavily agentic search into its existing AI cloud platform, Nebius is expanding the integrated software stack developers needed to assemble and operate enterprise-grade agentic systems. Tavily technology becomes a critical component of this stack, complementing Nebius's Token Factory, while Token Factory provides the high-performance inference required for agents to reason, providing the real-time web access required for factual accuracy. By combining high-performance inference with real-time grounding, Nebius provides the essential building blocks for next generation of AI applications. Yes, that's what it is. I speak Hebrew. Cool. Are we tanking? Is the broader market tanking? I wouldn't say so. I mean, since 1 o'clock, yeah, we've been, we're down $2. But, like, grand scheme of things, we're still pretty flat on the day. Okay, let's see if there's any broader news that's popping up right now. Okay. Figure is showing off a new update. That's not going to do anything. Oh, are we seeing some red candles now? What's the story here? President Trump said that if no deal is reached with Iran, the U.S. will take very tough action. That was 27 minutes ago. He said he's weighing the development of an additional aircraft carrier to the region along with additional forces. Not good. Not good. Sam Bankman-Fried has filed for a new trial in the Southern District of New York. Bro, keep this guy locked up. Solitary confinement. Stealing billions of people's dollars. What's going on with Charles Schwab? What's going on with Charles Schwab? Damn, dude. Down 8.9%. Let's go digging. I thought you were joking. Sometimes people are like, oh yeah, things are tanking. I'm like, oh, sorry. No. This is old news. I read this already. Altruist rolled out an AI tax planning feature inside Hazel that reads clients' documents like 1040s, pay stubs, and statements to generate tax strategies and run what-if scenarios without manual entry. It's available to any advisory firm, and Hazel has priced this at $60 per seat per month. So both Morgan Stanley and Schwab had ended up taking quite the hit on this news. I don't follow Morgan Stanley. Morgan Stanley down, Schwab down 8.8. That was a few hours ago. AI-powered tax planning solutions. But this is what's going to keep happening. Like, this is why I don't understand, like, and why I wouldn't rush into buying a ton of these software names. Like, every time that there's a new tool, we're going to see massive corrections. You know? Claude announced AI broker or something. Yeah, not quite, not yet. Okay. SoFi went up 3%, then reversed back to red. Crazy. Hit $22 and came right back down. 21.22, down 0.6%. Ethereum is actually writing about their ERC, 8004 protocol. The standard for universal AI agent identity, reputation, and verification is now live on the Ethereum mainnet. If you want to implement ERC 8004, mint your agent's ID. No need to rewrite your agent. Generate a registration file. Yeah, okay, cool. Little AI Ethereum stuff going on. Oh, I've also seen this as well. A lot of people are getting access to Robinhood banking right now. Chris Patel actually just saw that his just opened up, today. I also saw a few people message me saying that they're getting access to Hood banking. Did any of you guys get access to this as well? Be very interested to see that. Check the VIX. Uh-oh. Morgan Stanley's also down, yeah. What type of clarity do you think can we can see before software can really rally earnings, AI, catalysts, etc.? I have no idea. Especially really broad-based AI. I'm not sure. Okay, wait. Banking, yes. Hood banking is huge. Yes. Got it. It's awesome. Yes, a while now. Dude, that's crazy. They're rolling it out. Maybe they're doing that before earnings. They're like, yeah, you know what? We just accepted 100,000 new customers for Q1. Meta reiterated that a market outperform from citizens, saying engagement is still up with a price target of $900. Let's go ahead, and VIX is coming down a little bit maybe. Meta, Instagram engagement momentum continues. Global time spent growth has grown 18% year over year, or faster for the last 6 months, while January is up 19.2% year over year, while the United States time spent growth has grown at least 16% year over year for the first 6 months. Or last 6 months, sorry. Yeah, they're saying MAUs are growing, monthly active users, the time spent is growing. Instagram usage is increasing for members by double digits. They think that growth at Meta is going to only continue to climb. I like so many of the Mag 7 names. I think Meta's amazing here. I think Amazon's amazing here. I think Google's amazing here. I think Nvidia is amazing here. And Microsoft might be one of the ones that I'm skeptical on, but the valuation that we've been able to see lately is just so unbelievably cheap, just like what we saw from Meta in their most recent sell-off. This is a $550 stock at its high. Now you are able to potentially collect this company at under 400. Do you hold Hood, Tanner? Yes, I sure do. It's top 5 position in my. By the way, I don't know what that Ned Flanders ass voice I just had going there. Yes, I sure diddly do. I do. It's a top 5 position for me in my portfolio. But really like Hood. We'll see what happens on earnings. It could definitely crash even lower. But you know, I'm bullish nonetheless on the long term. We have to remember that if you're a total market or total addressable market investor, one of the things that you want to focus on are long-term tailwinds. The great wealth transfer has never changed for Hood. And in fact, you know, it got the stock very excited on the way up, you know, but it should be that anchor as it comes down to realize like, okay, you know, people are still passing away. Money is still transferring to the younger generation. That younger generation uses Hood. Tanner Flanders. Yeah. Tanner, when's the last time you sold out of a core position? Really recently. So I completely got out of Airbnb, just sold out of that name, and more opportunistic than anything. I still did like the diversification of my portfolio, having a little play in real estate and a sort of an innovative tech way of looking at that industry as well. I like sort of that sharing market. So, you know, whether that's Turo with you know, car sharing, Airbnb, Uber, or potentially even like parking space sharing and stuff like this. I think they're all great markets. And so I like Airbnb, but I just think that the growth at many other companies, I've just been getting frustrated with Airbnb, even though I believe so heavily in Brian Chesky. I think he's such a great operator for Airbnb. I just have a bigger belief in some of my other names. Thoughts on Shopify's earnings tomorrow? It's going to be amazing. Big fan. Tan Flan. Okay. Why are things going down? I think it has a little to do maybe with what Trump had just recently tweeted regarding potentially moving more military assets towards Iran. Let's go ahead and take a look at that. See if there's any commentary here. Little bit of comments from Lindsey Graham. Either we reach a deal or we have to do something very tough, said Trump. They're moving military assets, maybe another aircraft carrier towards Iran. Okay. Would you start a new position in Hood right now? These are hard questions to answer. It depends how long-term of a view you have and if you even believe in the company or the industry. I think that this is a good price to pay for a long-term compounder of the company. Tanner, I'm meeting whoever my future wife is. My parents set us up. That's very interesting. Hopefully you guys get along. More distractions from the Epstein files? I don't know about all that. I think we should maybe get to the bottom of it a little bit. Oh, sorry, you said from the Epstein. Yeah. No, I agree with you. Sorry, I thought you said the Epstein files was a distraction. I was like, ooh, that might be a generational bad take. No, I agree with that. Palantir and Airbus extend their partnership for 10 years. I saw this. Yeah, very cool. Yeah. Okay. Let's go ahead and also Spotify is also a company, dude. This is what's hard. I think there are a couple of these businesses that, like, Spotify will probably continue to do well. I have no faith in this company. It's not that I don't think that even their operators leaving. Daniel Ek is this was his last quarter being the CEO. I'm actually a user of this product. Okay. This and Netflix. I'm like, I'm a user of these products. I'd never buy them because honestly, if I was smarter and I was becoming a new customer right now, I'd just get YouTube Premium. And so they did great. EPS smashed, revenue up 7% year over year, monthly active users up 11% year over year, premium subs grew by 10%. Everything looks great from, their statistics here. But I don't know. I don't understand this moment for Spotify and for Netflix and these sort of things where they're starting to offer you free content in a paid version and being like, Like Netflix is like, hey, look, we have Netflix podcasts. I'm like, these are available everywhere. It's not even exclusive content at all. Oh my God, Tanner, I just looked at Twitter and they're saying you were mentioned in the Epstein files. Bro, if I was in the Epstein files, it would be me as one of the kids. I have zero elite class for me. I'm not in the files. Do not start this. The mustache is purely to look like Ned Flanders and nothing else. Okay. Yeah, YouTube Premium. You do get YouTube Music with it. You're a tech nerd. Normal people will continue with Spotify and Apple Music. Yeah, I agree. They'll do fine. Like I actually think Netflix and Spotify will do fine, but I just can't wrap my head around the investment because of those concerns. Because I just don't feel like their product is actually better than the alternatives. He developed his passion for the sauna on the... Was there like a sauna? I'm not actually following the file stuff too much. Whenever something like big gets reported, obviously I see it on X and stuff. But was there a sauna on the island? Maybe this is not even appropriate. Maybe I'm not giving enough... I'm not being sensitive enough to the situation. It's crazy how quickly humans can adapt to the situation because, this has been going on for just so long that it's not like, I don't know. It's not the direction that I should be going down in terms of the conversation. Anywho. That's not what I said. I did not say they are not so bad after all because they had a sauna. I did not say that. Okay. Trump's Commerce Secretary Lutnick admits visiting Epstein's island during family vacation. My understanding is that he met with him for lunch because he was near the island. Did he actually end up going on the island? This is crazy, bro. For real, we need to start cracking down on some of these guys. Now, to be fair, I don't actually think that everyone everyone that was even around Jeffrey Epstein, I think everyone's getting sort of a bad name because obviously, like, hey, of course, if there's this, villainous overlord that, you have to question anyone that was involved. But I don't actually think that means that everyone that was even remotely doing business deals with him or something like this, that means that they had any idea about what was going on. But there's definitely some. There's definitely some, and I think that it's crazy that they are like redacting names of conversations that are being had like immediately around children. It's like, I don't know how you can be so powerful that the FBI and the CIA and all this stuff are like redacting your names. Like it's nuts. We're total pawns. We're not. We have no idea what's going on in the rest of the world right now. A little bit crazy. Okay. Charles Schwab now down 9%. It's a man's world. Well, I don't know if it can be described so easily. I mean, I know I'm not the manliest man, but I'm not involved. Like, we don't all have the same powers here. Dude, him's down another 8%, $17.80 on this name. Crazy. Island sentiment is down. Are people bearish on the island? Okay. Oklow's down another 6.9%, finding new lows for the day, $69.86. What was the height for this company? 193. Yeah, I mean, we knew that wasn't going to end very well. Doesn't mean that they can't find new heights eventually, but like that is a steep decline from where we were before. But like, honestly, what did people expect? Like, you're excited about this company making revenues and profits 5 years from now? I'm excited about how much revenue and profit, Meta and Nvidia and Google and Meta, or I already said Meta, all the Make 7 names are going to make 5 years from now. But at least I can still make some profits today. All financials are taking a hit right now. Dude, I was looking at AJG, which is a massive brokerage, insurance brokerage here in, well, I mean, I think they're worldwide, but they're also in Canada. And I was like, dude, look at this insurance name. They've gone from $351 a share down to $211 with a PE that's still roughly about 37 times. I wonder what it was even at 351, Did Hims have good numbers before all the news? I'm not sure. I don't follow the space. But everyone told me to get into it, and I was not buying in. I don't like to buy companies that I don't know the industry about, regardless of the numbers. Wells Fargo is down 5%. Also, I didn't realize Wells Fargo has a $277 billion market. Well, I guess that makes sense. I guess I'm not that surprised. Citi's at what? 209. Bank of America, let's have a guess. Bank of America is probably at 500-600. Never mind, 392. And JP Morgan is at somewhere like 810. 858. Okay. I thought Bank of America was bigger than that. Tanner, you're a real man to me. You're a Chevy driving, Coors Light drinking, bald eagle riding man's man. Yeah, I got news to break for you. Amazon is the robotics play. I agree with you. Okay, let's go through and have a look at some news if possible. Abu Dhabi's MGX is said near investment in Anthropic's fundraise. What are they fundraising at? Again at 350 billion, or did they end up getting to raise that round at all? Because they've been raising a lot of money at $350 billion. A lot. Citizen Bank models that Amazon's AWS capacity adds translating into 30.5% AWS growth exiting 2026 and 28% growth in 2027. Dude. That's going to be extremely exciting if that comes true. Datadog just got a $185 price target upgrade from Rosenblatt. Currently at 130. What's the biggest Canadian bank? RBC. Royal Bank of Canada. Epstein files are just elites testing what they can get away with. And since no one is in prison, they learn that they can do whatever they want. Well, I think if they could have chose, they would have, remained not having their face out there. But yeah. Tanner, have you ever thought about having guests or trusted fans onto the show to pitch a stock or discuss macro ideas? Yeah, I mean, having guests on for sure. It's just hard to go through that list and find people that have availability in the middle of the day. As for fans and stuff, we actually do that on the pro show, or that's just because we can actually vet people much easier that way. So if someone does end up coming on and screaming profanities or something like this as like a troll, then, obviously they're not going to have access to that show anymore. So that's just much easier for us to do rather than on this show, which could actually get me in trouble. Tanner, is Canadian bacon in Canada just called bacon? No, it's called, well, I don't even call it Canadian bacon. I call it P-mail bacon, but it's essentially ham. And then we do have bacon as well, which we just call bacon. Content full-time. Could do background checks. Who do you think, what kind of operation do you think this is? What do you mean do background checks? How? I'm not taking a look at people's passports before they come on the show. I'm just, what is even a background check? What does that mean? Tanner, do you ever trade levered ETFs? No, not at all. No. Do you think Tom Lee knew crypto would bottom and that's why he bought Mr. Beast and not ETH then? No, because it was so close. I don't know why he would make any purchase if, like, I don't think the two are related. I just think that he saw a good opportunity in Mr. Beast, and not everyone has the opportunity to invest in that company. But I also think that, if he knew that ETH was bottoming, he wouldn't have purchased all the weeks that he did previously, and he wouldn't have put that $200 million into Mr. Beast if he could have put that $200 million into ETH at 1,700 or whatever. That would have been such a great buy. Okay. White House press secretarially. What did I just say? Secretarially? Okay, guys, I have Robinhood's earnings call tonight. I'm going to be on the call. Meaning like I'm asking a question. What question should I ask? What question should we ask? I want to ask about either the banking product, prediction markets, yeah. I'm not sure. Will Hood do real football betting? You mean aside from prediction markets? I do not think so. Prediction. Wait, where was that? Prediction market growth predictions in Q2. Yeah. Yeah, why not in Q1? When will Hood be offered to Canadians? I thought about that as well. Just asking them like what's happening with the acquisition of WonderFi. We heard about that and then that went away. I don't know. Supposedly there's a 9% swing either way expected during or in the after hours for tonight. Okay. Dude, honestly, I just can't wait until Nvidia's earnings. I know I keep saying this, but like TSM's insane increase in growth on their chip sales is just the best news that you could possibly ask for Nvidia, and the stock just stays flat. You know what? I haven't lived through like a lost decade in the markets, but this is what it must feel like. Is just like every piece of great news that could possibly happen, and the stock doesn't move an inch. Like, how are we under 190 right now? How are we under 200 right now? You know, PE of under 47 times. And this is like, bro, I don't know. This is before we're end up going to see another quarter that brings up revenue to 65 billion and then probably pushes guidance for next quarter into the 70 plus billions of dollars. Yeah. Strong iPhone 17 cycle giving better than expected revenue guidance, says Mark Newman. Ooh, okay, let's have a listen to that. Little Apple, it's one of the Mag 7 names that we've not been following as closely as the rest of them. But they ended up putting up a great quarter as well, kind of saved the market a little bit. Let's have a listen.
Joining us now is Mark Newman, senior analyst at Bernstein. Mark, welcome to you. 15% gain if people are price insensitive means it could actually be a boon for Apple, but we have to see how they respond, I guess.
Yeah, that's right. I mean, I think 15%, that's kind of where things are shaking out right now in terms of how much costs are going up based on the huge price increase from memory. And, you know, we think Apple's going to pass those on to consumers. So some consumers may decide to delay the purchase. Some consumers may decide to perhaps buy a slightly lower spec. So we've kind of tried to assess like all of these impacts, but we still shake out at slightly higher estimates based on, you know, the strong iPhone 17 cycle. We think iPhone 18 is not going to have as much unit growth because of the higher price, but the higher price helps a lot. And so that's really where we're coming with still tweaking up estimates today. Right. And you know, it's hard. We were just hearing about the pressure on the consumer. So it's hard to imagine that some people aren't going to bulk and say, you know, a phone that's 15% higher in price. I mean, it's going up, what, $150, something in that neighborhood. I mean, that's a big, meaningful chunk. Yeah, no, it is. And we assume that there's going to be a slight downward shift in mix because of that. And also some unit growth. We had assumed unit growth of 5 to 6% for 2027, fiscal year 27, and now we've got unit growth roughly flat because of that, and that's because of this. And that's irrespective of what's going on. If you look back, what's going on right now, one of the reasons iPhone 17 unit sales are so strong is because of this COVID cycle just lapping itself. You've got a lot of old phones that are 4 or 5 years old, and so I think that's going to help the iPhone 18 cycle. But despite that, we've just been a bit more conservative and assumed, like you're saying, some of these cost price pressures on consumers will hurt unit growth slightly.
Yeah, it's still been one of those stocks that people feel a little bit more comfortable with amid the AI wars. And it's a bit ironic because they were blasted for not being in the race the past couple of years. Can they kind of stay on the sidelines and say, look, while you guys duke it out, we're selling iPhones pretty well. You're using all of this new technology on our devices. I don't know if you need them to ramp up their CapEx much more and do different things with Siri in order to kind of maintain this position. They had that 8-week losing streak earlier on. So have they put that behind them now?
I mean, I think this is what I wrote today in the note to investors today is I actually think we did a lot of analysis on memory prices because that's a hot topic right now. Memory prices going up and what's the impact. And so a lot of our note today focuses on that. But saying that, I still think actually a larger driver of the stock price this year is really going to be what happens with Apple Intelligence or Siri 2.0. They're 2 years late. This is the year that they've got to show something. They have announced that partnership with Google Gemini, and I'm pretty optimistic that we're going to see something pretty interesting, a meaningful step forward. I'm not saying it's going to solve all problems immediately, but I believe you're going to see a meaningful step forward this year, and that's going to help. And I think there's upside to unit growth from Apple Intelligence because people are going to want to have the latest and greatest phone. There's upside also to services because Apple could actually monetize this with the Apple Intelligence. So I think that Apple Intelligence is actually the bigger driver for the stock this year, which is, we're positive on the stock and we just increased target price today, as you mentioned.
As he was talking, I was able to go through and read some of the comments, and I actually really do appreciate your guys' feedback on my thoughts about Robinhood, on Nvidia. First off, Erwin, good to see you, brother. But from a lot of your comments, I've actually just gotten a lot more bullish on sort of my thoughts about Nvidia. Tanner, you don't get that Nvidia is just fully priced? Okay? All the growth is already baked into the stock. Is that so difficult to understand? Tim, yes, it is so difficult to understand. Okay, one, you're making that up how? Based on what statistic? They have like the cheapest forward PE, if not maybe Microsoft's slightly lower now, but we can have a look. I'll back this with real data. You're saying this, but you're not. There's nothing to actually justify that at all. What's a company that might actually be looking and baking in all of their growth? You could say a Palantir or something like this. These companies are trading at hundreds of times their PE, right? Hundreds and hundreds. Nvidia is the second cheapest company on a forward price to earnings than any other company in the Mag 7. Okay. And they have the highest margins. It's not even remotely close. The growth rate is so much higher than the rest of the market. It's insane. And then I saw another comment here. The risk with Nvidia is that Meta, Amazon, and Google will make their own chips and that they don't need Nvidia anymore. No? Yes, that is one of the risks. The truth is that just hasn't come to fruition at all. Google might be that, one of those players, but they've been in the market for a freaking decade. So, as Jensen has said multiple times, there has been so many, even Meta's been trying to make their own chips and then they give up on those plans. OpenAI tries to make their own chips, they give up on those plans. It happens constantly. Just because something is It's the same with the EV market. Just because something goes into a little bit of a concept doesn't mean that it goes into production. And that by the time that they actually design a chip, get it ready to go into production, that they actually just realize that the total cost of ownership on this old generation chip is not even remotely close to just buying Nvidia in in contract with them over the next multiple years. So it does pay to be fully focused on one product and also, pay for a competitor. And although Nvidia is expensive, it has to come down to total cost of ownership. So I know many people think, they'll say things like, hey, you know what, AMD is so much cheaper. Why buy one Nvidia chip whenever you can just buy like 4 AMD chips for the same price? It's like, okay, but then the amount of energy that you're going to use to run those 4 separate chips is actually much worse. And then the latency and performance is actually much worse to connect those 4 chips together. So it still, in this market, it's much, much cheaper to just buy the most expensive chip in the most compact form factor, because you actually end up saving on energy costs and increase your token output because you lower that latency. Okay. Going back to the comment. Oh, sorry. Before I go back to this comment, another one of the concerns that I ended up seeing in this comment section was, how can you trust Nvidia's earnings with all the secular, I can never say this freaking word, circular investments? I think the main thing is that the total investment that they're putting into certain businesses is not even remotely the size of what they're getting out on the other side. Let's use their most recent example, CoreWeave. They ended up putting $2 billion into CoreWeave at an $87.50 price on CoreWeave, which they bought in secondary markets. Or sorry, that's not true. They bought it directly from the company. So CoreWeave ended up issuing new shares at $87.50. CoreWeave is already above that price, okay, even after this recent sell-off. So Nvidia is up on their equity that they ended up buying for CoreWeave. That's what we're doing with our money today, just in open markets. We're looking for companies at good prices, and then at the other end, we are hopefully going to sell that equity at higher prices. Already, this is a good deal for CoreWeave, or for Nvidia, right? They have created a venture arm, and that venture arm is worth more today than what they've put into it. On the other end of that, they also signed an agreement with CoreWeave to buy 5 gigawatts over the long term, 5 gigawatts worth of Nvidia chips that will include CPUs, networking, their Bluefield chips, all of it. What that is essentially going to generate, what Jensen said, is that whenever you set up an NVIDIA gigawatt data center, you're roughly in the ballpark of $30 to $40 billion worth of their chips. Let's earmark, we can go to the bottom end of that, $30 billion. They've given a disgusting deal to CoreWeave. They're a big partner. They don't want to gouge the eyes out of their own partners. $30 billion times 5, $150 billion worth of chips. Okay. So on the other end of them giving them $2 billion, they are going to see in the long term $150 billion from CoreWeave. How is that circular financing? They are going to buy into, with common equity. They're not financing these companies. They're getting common equity. Okay? So they're making deals the same way that me and you are making deals in the markets, except they're also getting out the largest potential dividend that's, however many hundreds of X larger than the initial investment. That's insanity. Okay. So keep that in mind. Let's go back to the initial Tim comment. Tanner, you just don't get it? All right. I don't get it. Let's go have a look. See if we can understand. So the Mag 7 names are great because they are, across many different businesses. They're tech forward. They've got huge balance sheets. Nvidia, by the way, the strongest balance sheet. They're super capital heavy, no capital expenditures. They're extremely focused on like they don't even make the chips, right? They send their designs to TSMC. They have the risks of actually owning the fabrications and everything like this. And essentially, Nvidia is a software company connecting their designs, and then they're almost like drop shipping their designs to their customers. TSM is fulfilling the products. They have many suppliers that are actually making these chips, but they're designed by Nvidia. Okay. One of these companies is not like the rest in terms of the growth rates. Okay. There's a blue line that sticks out amongst the rest of the Mag 7 names that are all tucked neatly in this sort of 25 to 7% growth rate. We have a company that's growing at 62% and expected to grow past 65% next quarter. 65%. Okay. Let's just do a quick calculation here. Imagine we had a company that made $100 per year and it compounded at 26%, which is what Meta's did last quarter, at 1.26 times. And then that compounded over 1 year, 2 year, 3 years. We've already doubled our revenue. So we've taken this company from 100 million to 200 million in 3 years. 2 more years, that brings us to 317 million. Okay. So in 5 years, at 26% growth rates, you can more than triple a business. At Apple's 7.9%, which is actually an acceleration of growth of what they've seen previously, you're essentially getting a company that is growing at 7 points. Oops, sorry. I have to put a 0 before that because in 5 years, you're up roughly 50%. At 62%, you're looking at a company that's growing at 1.62. They're going to 11x their business over 5 years. Like, people can't even fathom how much 60+% is. It doesn't mean that they're going to hold that up over 60+ years or over 5 years, but like any amount of time that you can even withhold this level of growth is so hard to even remotely fathom. The human brain just can't comprehend how much growth this is. So then we get into valuation. If a company's growing that fast, obviously you have to pay much more for them. And that's what the market's doing right now. Nvidia's price to earnings right now about 47 times. At the bottom, you have Microsoft 26 times. And then sort of, in this 30+ range, you have Google and Apple and all that. And then, sort of, where's Amazon? Oh, Amazon's tucked in there as well. Okay. And then going forward, so Apple was the second highest priced company, but now at the height, you have Apple on a forward basis is the most expensive name, growing the slowest on their earnings. And sorry, Steve, I apologize. No Apple slander, but they are the slowest growing company and the most expensive at that, both, practically on a PE basis and then next year PE basis. At 31.9 times, which is honestly like practically cheaper than the S&P 500 anyways. And then you have Nvidia here at 27 times. What do you think it's going to be the next year after that? What do you think it's going to be the next year after that? Well, growing at high 50+% margins, growing at 60, 50, 40% over the next few years. Like, get a hold of yourself. How can this company be fully baked in whenever capital expenditures for Meta, Google, Amazon all just increased CapEx somewhere as high as 50% higher than expectations from Wall Street consensus? How can they all increase numbers, but yet that was already baked in? No one even knew. Wall Street was so far off. They said Amazon's going to do $150 billion of CapEx. They came in at $200 billion. Okay. And then they go, that's already priced in at Nvidia. Give your head a shake. Tim in chat. We have a lot of Tims in chat. I'm talking specifically to whoever said, is it that hard to understand that it's already priced in? It's like we saw CapEx growth. How could it possibly be baked in? I don't trust those numbers. Yeah, I mean, hey, if you want to believe that the same founder of 30 plus years is now lying? Or are you saying that the CapEx is going to then get cut? You know, good luck. I'm going to remain bullish on my Nvidia views. Tanner, stop already. Tim is cooked. No, he might be right. Who knows? But I just don't think he is. Did he reply, by the way? I was going off. He did. Totally unclear why everyone is so pissed when we're trying to understand why Nvidia's stock price is flat. No, I'm not pissed. I think it's an opportunity to acquire more shares. Like I'm not looking. There's not a timeline in which I need to make this money. This is why I don't do options, because I'm not clear on when markets are going to see what I see, and I could be wrong. Maybe I need to, straighten up. But like TSM's numbers just came in. Like, do we not just see this? How could this possibly be baked in? I don't get it. I don't get it. They just ended up showing off 36.8% growth, and all CapEx numbers all increased. We're now talking about data centers in space. Does that replace Nvidia? Okay. Tanner blacked out. I'm back now. I'm back. I took a sip of Celsius and we're good. I'm here. Nvidia is not their only partner. Dude, go look at the numbers. Okay, anyone that ever says like, well, there's other chip companies too, give your head a shake. Okay? For real. They are the only player. They've got like 85+% of the market. Anyone that thinks anyone else is even remotely in the game right now is lying to themselves. I mean, there's a lot of demand for a lot of chips. Oh yeah. I'm sure the biggest call that Google gets is about their TPUs. Dude, they say that on their call, and then like that's what's so funny about these calls. I swear they're brainwashing investors where people think, companies are picking up the phone and going, tell us about your Trainium chips. We would love to know about your Trainium chips. And then that same company that is talking so highly about their Trainium chips goes and orders another $1 trillion worth of Nvidia products as if, they're completely out of demand and no one needs them anymore. It's so funny to me that of course, no other company is going to pick up or go on their earnings call and talk about another company's products. Actually, there still was. Google was touting about how they're actually getting access to Vera Rubin chips, and Nvidia is a big part of their like investment strategy. But they have no reason to talk about another company on their earnings call. But yeah, it's just very funny to me that like, okay, so where do we think all this $65 billion a quarter, 70 billion, 80, over $100 billion into the future is coming from if no one cares about these products? AMD and Micron over Nvidia. Well, I don't think it's Micron versus Nvidia. I mean, the only way that you're going to get Micron to even work is if Nvidia does well. So you better hope if you're an Nvidia, if you're a Micron investor, that Nvidia does well, I promise you. But yeah, like go look at AMD's data center sales, go look at their the overall revenue or even the growth rates, and then go back and look at Nvidia. Yeah, I'm not even anti, like I said, I'm not anti AMD because the valuation might justify those sales. $350 billion market cap might actually justify them having way lower sales. But you're not about to come in and say they're doing better than Nvidia. It's like, all right. Okay, we can lie. That's fine. Okay. Let's go see. Yeah, and then like, oh, you know what? It's all we're all focused on AMD with a PE ratio of 80 times right now. 80 times. What's the revenue growth rate? 35%. So you're paying double the amount for half the growth. Yeah, I don't know. It's all good. Everyone's looking for a way out of paying the Nvidia tax. Yeah, I mean that is definitely true. No one does want to pay Nvidia, but whenever you have a product so good, you can charge whatever price you want. Do you feel like you'll trim some of your Nvidia if it approaches 50% of the portfolio? Yes. Yeah. Look at the chart for Nvidia's performance history. At what time frame? Of course, Nvidia is an amazing company, best in history, perhaps, but it doesn't imply that the stock goes up. Tim, I agree with you. And I think that's not even like you're not wrong at all. I think that the thing where I don't agree with the market is that we're being priced similarly to, let's say, a Microsoft that also has potential risks as well. I mean, Nvidia's risk is that they get innovated away. We end up finding breakthroughs in some of these XPUs, and that you can find that same performance from directly Microsoft chips and Google chips. And so, Nvidia's price has to come down, and then that impacts future growth rates, and then, the valuation completely justifies itself. But we haven't seen any of that. And I think the price is so low comparatively to the growth that's being put up versus, like what I said, like showing off other companies that are putting up similar growth rates. Well, the market is active, and I don't mean market sentiment. I mean like CEOs telling you what they're going to do with their money, is saying, hey, we need to go get loans. We need to go increase capital expenditures, and we need to buy as many chips as absolutely possible. And, it's getting so serious that Nvidia, for example, is having to like slow down their growth on their gaming chips just because every dollar in focus needs to go towards data center focus. I haven't seen a single thing. I've heard a lot from, analysts and stuff like this, which also are not saying what you're saying in terms of the prices already justified. They have like the highest upside in against the Mag 7. They have currently a $260 price target on Nvidia, 37% upside. So Wall Street consensus is actually that this company goes a lot higher. But yeah, I just I don't. The CapEx spend increase should have led to immediate boosts in Nvidia's growth. Yeah, Microsoft's chips are a joke. I'm not. The only real competitor that I'm taking serious right now is Google. And sorry, I don't mean AMD, not to write off AMD. AMD is very real. I meant out of the custom silicon names. Tanner, you can't deny that the CapEx will eventually go down after this huge build out. Nvidia will grow revenue slower after that. When is that? When is that? Because there's now, like Gene Munster literally just came out online and said this build out cycle is probably going to be for another 5 to 10 years. I know that we're seeing unprecedented amounts of demand for chips right now, but we're also seeing unprecedented levels of productivity unlocks to the point where it's affecting labor markets. Like, you know what I mean? If we continue to grow at this rate, but yet the stock stays down, one of two things ends up happening. You bring the multiple of the company down so much, like let's say the company stays flat, but growth continues to pile on, and we get to that $500 billion over 5 quarter mark that Jensen had been looking for. $100 billion a quarter. They essentially want to see that get up to $150 billion in revenue a quarter that has net revenue or net income margins of roughly 50% on them. Okay. If the stock stays flat, it's buyback city. And, going forward, if the PE, let's say, drops to 18 times and just everyone has complete, disgust in what Jensen's working on and they can't give it a premium at all, then every time that we see earnings, which bumps up net income by what Gene Munster said, even at its bottom, just in maintenance mode, like we're still looking at probably like 10 to 15% growth rates. I'm okay with holding a company at 10 to 15% growth rates that's potentially focused on the next big S curve of robotics, agentic AI, whatever's next. Could be, data centers in space, what have you. But the bet has never been bet against Jensen. It's never been, hey, you know what, they're, eventually they're going to get innovated away or something like this. It actually seems like the final form of innovation is silicon. Like, yeah, anyway. We'll see. Switching costs are no joke. Yeah, like even 6+ year-old GPUs are still fully rented. There's not been a single data point that's even pointed remotely towards Nvidia, like somehow losing here. Okay. Most of the investors thinking that Nvidia is already up so much, no room to grow. Much of the investors thinking that Nvidia is already up so much, so there's no room to grow. And what if the market stays that way forever? Do you think that'll be the case? Well, that's what I was essentially saying. Like if a company sentiment just stays low forever, you almost get into like that AutoZone type thing where if no one's willing to buy the stock, then they just need to continuously show that earnings come in and then they can buy their own stock. Let's imagine that a company just refuses to go anywhere, but like they're just stuck at like an 18 times PE. But then the growth on earnings is continuously 20%. But the sentiment is that it'll just come down next year. It'll come down next year. It'll come down next year. Which, by the way, go back, listen to all the people that have even been on this show, like the Chris Patels of the world, which I love. But he said like 2026 would not be the year of CapEx growth. It's just completely like everyone's time. Anyone that ventures to believe what they think is going to be the future of artificial intelligence has just been straight up wrong. All of them. I don't even venture to know what is going to happen, but I'm like, I've never seen in history a technology that has gone backwards in terms of like, oh, wow, this is bringing us more productivity. Let's use it less. That's never happened, So we can look at people said that, full self-driving was never going to come. That happened. People said, the internet's not a fat, like every single technological advancement where people have said like, this is not going to be able to come the case, or I don't know. It's just been like the worst bet in history constantly is to bet against technology. And now we have this innovation is based on code, but it writes code. And it's already starting to write some pretty unbelievable products. And you guys think that's going to slow down? Yeah. I could be wrong. I've been wrong before. I don't think I'm wrong now. Stock hasn't moved in 6 months. I don't care. Like, for real, I would like it to be up, of course, but that timeline is so short. I'm not writing options on it. It's fine. You know what has changed over the 6 months is the amount of revenue that they've been able to acquire. 47 times PE is high, though. Dude, they're growing at 65% next quarter. Margins are staying at 50 to 55 or 50 to 55%. Do you know how fast a 47 PE gets wiped away whenever a company is growing that fast? I mean, you have like a quarter or two before it's cut in half. Okay. I remember when they wanted to stop leaded gas and everyone freaked out and all the cars were going to die. Jobs data tomorrow. You do a deep dive on Coin? I like Coinbase. In fact, we actually saw a report today. Where was it? There was a pretty interesting report from IBKR. Where did I put that? Interactive Brokers expands its crypto futures lineup, adding Nano, Bitcoin, and Ethereum futures via Coinbase derivatives, which I actually thought was interesting. Really goes to show you that they're not easily replaced, and they work with some of the biggest names. Tanner, will we see an increase in Meta revenue next quarter because of Threads ads? I'm not sure it could be directly attributable to Threads ads. It can't hurt going from 0 to 1. But yeah, they are guiding for 30+% growth next quarter, year over year. Coinbase price targets slashed today for Coinbase also. Yeah, Coinbase is going to get decimated as crypto falls. So that's just going to happen as Bitcoin is under 70,000. ETH is still $2,000. They're speculative assets, but they have come back after, massive drawdowns. Did you see that Chamath is interviewing CZ? I was watching it before I went live, but I haven't seen it all the way through. Yeah. I will have no Jeremy slander in this chat. I like Jeremy a lot. He can be bullish on AMD. Like I said, the valuation of that stock is at such a different level than Nvidia that I think they honestly have, like, you're playing the same field, but you're playing it from two different areas. I like market leaders, but some people can obviously find names that are maybe being a little bit more disrespected. So I think there's money to be made in both. They play in the same field. When does fundamentals count for less if it doesn't reflect in stock price? It 100% of the time always is reflected in stock price. It's just the timeline that might not end up, like, in the short term, the stock market is a voting machine. In the long term, the stock market is a weighing machine. Essentially meaning sentiment can take over a 6-month, 12-month, 18-month period. That's no problem. Any 5-10 year out stock is 100% designed to be focused on through fundamentals. Someone's sentiment 10 years out doesn't matter. because they were clearly wrong. Or, well, I mean, they could be right as well, but like that would be then justified in the fundamentals. You know, Warren Buffett never looked at his companies and been like, oh, you know what? These are not actually, this is not a fundamental based stock. This is a technical space stock. You never heard him say that in his life. Intel was a market leader. Yeah, but it showed up in the numbers that they were dying. For real, Nvidia is accelerating growth rates. They've been doing that for multiple quarters now. When you find a company that's growing faster than Nvidia, let me know. Okay. Okay, it's 2:41. Let's see if there was a bunch of topics I didn't talk about. We didn't talk too much about the Nebius acquisition, but overall, I'm excited. I'll be covering their earnings. Lutnick said that America's demand is vast for AI chips, and we don't want to do anything to stand in their way. So you also have, Nvidia's on the side of the government as well. It's one of the other sort of pillars of how I look to invest is you don't want to be, going against the administration. Nvidia is not. They never have. That's Jensen, right? He doesn't donate to any political party. Like they've always been extremely apolitical, and that's for very good reason. Yeah. Okay. Yeah, but whenever I said find a company, like you could find a lot of companies that are growing faster than 65%. That wasn't Nebius is growing at 400%. I meant in the chip design space, not any company in the stock market that grows faster than 65%. By the way, Palantir is doing that off of a $1.4 billion base. Nvidia is doing it off of a $60 billion base. Good luck. Ladies and gentlemen, though, that's it for me. Really do appreciate your time. But until next time, which is going to be Robinhood earnings, I'll see you guys there. Bye for now.